Imagine this. You just had the worst trading week of your life. Every day was a loss, your confidence is shattered, and you're asking yourself, am I really cut out for this? Listen, I've been there, staring at my screen on a Friday with a week's worth of hard-earned gains completely wiped out. And I know it hurts. But guess what? Every single successful trader has been through that. And yes, even the pros. The difference though is what they do next. And in this video, I'm going to show you exactly how to bounce back, how to rebuild your trading confidence even after a brutal losing streak. And you want to stick around because by the end of this video, we have a step-by-step game plan on how to come back stronger than ever. So let me share a quick story with you. So a while back, some years ago, I had a week that nearly broke me. I'm talking about 5 red days in a row. And by Friday's close, I'd lost more in 1 week than I usually even make in a month. I remember staring at the P&L feeling completely numb. My hands were shaking on the keyboard, and that week I questioned everything. I questioned my strategy, my skills, my future in trading. I literally questioned everything. But that awful week turned out to be a turning point. Now why? Because I decided it had to be. Instead of quitting, I took a deep breath and said, all right, how do I fix this? And what came next is what I want to share with you. It's a process. It's my roadmap for rebuilding confidence that took me from feeling defeated and scared to getting back in the game with renewed focus. If you're in a slump coming off of a nightmare week, this is exactly for you. So here's the plan we'll walk through. First, we're going to stop the bleeding and reset your mindset. Then we'll dissect those losses to find out what went wrong. And next, I'll introduce my BC30 strategy, which is my personal framework that played a huge role in restoring my confidence. And finally, we'll then talk about the actionable steps to get you trading again calmly, strategically, and ready to win. Let's get into it. So guys, the first thing you want to do after a losing week is hit the pause button. Seriously though, do not rush and make it all back on the very next trade. That impulse is how small losses turn into catastrophic ones. Think of it this way. When you're emotionally charged, whether it's from frustration, fear, or anger, trading is like driving while blindfolded. You're going to crash eventually. So step away from the screen, take a day or two off, or even a week if you need to clear your head. Now, during this break, you want to remind yourself that losses are part of the game. I know it sounds cliche, but it's true. Even the best strategies on the planet have losing streaks. You haven't suddenly lost your touch just because of one bad week. Now write this down somewhere. 1 week does not define me as a trader. Internalize that. The reason we take a break is to break the emotional spiral. No revenge trading, no trying to get it all back in one shot. Instead, we focus on recovery over a series of smart decisions. This mental reset is what's crucial. It's exactly what I did after my nightmare week, and I pushed the keyboard away and said enough for now. Only after I cooled down, I came back to approach things rationally. Use this downtime to do healthy things. Hit the gym, go for a run, go get some good sleep. Anything that helps you burn off some of the stress. You want to return to the desk a few days later feeling neutral, not desperate. Trust me, a calmer mind will set the stage for the next steps. So now that you've taken a breather, it's time to play detective. Analyze those trades. Don't agonize over them. There's a big difference. Instead of thinking I'm such a failure or endlessly replaying how much you lost, approach the situation like an investigator looking for clues. Pull out your trading journal. If you don't have one, start one now. Go through each losing trade from the week and ask what happened and why. Here are some questions to guide you. And be brutally honest with the answers. Did I follow my trading rules or did I go rogue out of emotion? Was each loss within normal expectations, like within your usual risks per trade, or did something weird occur, like slippage or breaking news, etc.? Were there common patterns? For example, did I lose mostly on a certain setup or at a certain time of day? Were these losses truly bad luck, or were they just bad trades? And there's a difference. A good trade can lose money sometimes, and a bad trade can occasionally win by fluke. As you do this post-mortem, write down your findings. This might reveal, for instance, that you deviated from your strategy due to panic, or maybe you traded when you knew you shouldn't. You might discover your risk management had holes. Perhaps position sizes were too large, amplifying the damage. Identifying these factors now is gold. It's how we learn. Remember, most traders lose money not because their strategy is terrible, but because they fail to consistently follow that strategy. If that strikes a chord, you're not alone. I've been guilty of doing this too. Now, very important, this analysis is not an exercise in self-shaming though. It's about objective facts. Think like a coach reviewing last week's game footage. You're looking for what the team did right and wrong, so you can adjust your game plan. By the end of this step, you should be able to pinpoint a few key reasons for your losing streak. Maybe you'll find, for example, that you violated your own risk rules or that you traded during news events and you normally avoid them. Maybe your strategy didn't fit the market conditions at all. Maybe like your system is for trending markets, but the week was very choppy. These insights will guide you on our next moves. And surprisingly, doing this analysis often boosts your confidence a bit too, because now you have the answers. You're not in the dark. You see some clear causes for the losses, which means they can be fixed or avoided going forward. After dissecting the evidence, you might be wondering, was it my strategy that failed or was it me not executing it properly? That's a crucial question. Sometimes what shakes our confidence is the fear that our strategy doesn't work anymore. Before you throw your whole playbook out the window, do an objective strategy audit. Ask yourself, is my trading edge still valid under the current market conditions? Markets change. A strategy that works in a trending market might stumble in a range-bound market. Check if something shifted recently. Volatility, market regime, news cycle, anything that could make your approach less effective. If the answer is yes, the market conditions changed, then your strategy might need a tweak or you need to sit out until conditions are favorable again. However, often the strategy is usually fine and it's our execution or discipline that slipped. If your review suggests that the strategy is fundamentally sound, then reinforce your trust in it. Sometimes our confidence literally falters because we hit a statistical rough patch. Remember, even a strategy with a 60% win rate will have clusters of losses. If you've backtested or have past data, compare your recent performance to historical norms. Are you within a normal drawdown or did you break your own rules which caused abnormal losses? This analysis is what's going to reassure you that, hey, my edge is still real, I just didn't stick to it, which is good news because you can fix it by returning to the basics. On the other hand, if you find a flaw, like say your setup isn't truly working like it used to, no need for despair. Treat it as a learning opportunity. Even the top traders periodically have to refine their strategies or develop new ones for new market conditions. In fact, continuous improvement is part of the trader's journey. And one more thing here, simplify. When confidence is low, one of the worst things to do is to add more complexity. Instead, you want to do the opposite. You want to simplify and go back to what you know best. You want to identify your bread and butter setup, the trade that you have the most success with, the one that suits you and you understand deeply. For now, set aside the fancy or experimental trades and refocus on the core strategy. By narrowing your focus, you reduce uncertainty. You'll trade something you're comfortable with, which can help you start accumulating wins again and then rebuilding your trust in yourself and in your system. All right, so now it's time to talk about a specific strategy, one that I credit for helping pull me out of my funk. It's called the BC30 strategy. Now, this is my personal trading framework, and I'm sharing it not to say use this or nothing else, but to illustrate how having one solid game plan can anchor you when your confidence is shaken. So for me, the name stands for break and close after consolidation on the 30-minute chart. So in plain English, it's a straightforward breakout strategy. Here's how it works and why it's great for rebuilding confidence. First, you want to identify a clear area of consolidation. Imagine prices moving sideways, almost like it's building a base or support structure. This could be over several hours or days, and I like using the 30-minute time frame, hence BC30, to spot it. Now, the consolidation shows indecision in the market, and I know that a big move often comes right after. It's like coiling a spring. Next, you want to wait patiently for price to break out of that consolidation range with force. That's the breakout. The key is not to jump early. You want to wait for confirmation. For example, a strong 30-minute candle closing beyond the range, ideally on higher volume. When that happens, it often signals that momentum is finally picking a direction, and then you get into the trade. I enter in the direction of the breakout with a decent stop loss on the other side of the breaking candle. So why is this strategy great for confidence? Because it's simple and clear cut. Either the breakout happens or it doesn't. Either it follows through or quickly hits the stop loss. There isn't much ambiguity there. So I'm not second guessing entries or exits. It's all predefined. This strategy forces me to be disciplined and patient. These are traits that naturally rebuild confidence. When I execute a BC30 trade according to the plan, I feel in control again, regardless of the outcome. And if the trade wins, that's a bonus to the confidence. Now, BC30 is what works for me, and your confidence playbook might be different. The point is, though, is to lean on a strategy that you know inside and out, one that you perhaps had success with historically, or is simple enough that you can execute it flawlessly even under stress. By doing this, you give yourself the best chance at a positive result, or at least a well-executed trade, which is a win for your psyche. After my terrible week, the very next week, I placed only BC30 trades. Nothing fancy. One by one, those trades started to remind me I know how to do this. I have an edge here, and that feeling is what we're trying to recapture. Incorporating your personal framework in your comeback plan gives you a structure to rely on. It's like an athlete going back to fundamental drills after a bad performance. It rebuilds trust in the strategy and in yourself. And trust is the foundation of confidence. So by now, you've taken a break Analyze the issues, refocus on your strategy, and now you have a go-to game plan like BC30 or your equivalent, and the next phase is getting back on the saddle gently. The key word here is gradual. Think of this as physical therapy for your trading. You wouldn't want to jump into a marathon right after recovering from a sprained ankle. Likewise, you want to ease your way back after a confidence-shaken loss. You want to start small. When you resume live trading, consider reducing your position sizes at first, maybe significantly. If your normal risk is 1% of your account per trade, then drop it to 0.5 or even 0.25 for a while. The idea is to remove the pressure. Smaller stakes mean that even if a trade goes wrong, the dent on your account is very minor. This frees you up to focus on the process, not the profits. Your goal for the next few trades is not to hit home runs. It's simply to execute well and get back into a rhythm. Each properly executed trade, win or loss, is a small win for your confidence. So for example, if you follow your rules perfectly on a trade, that's a victory in itself. Give yourself credit for it. This mindset shift, valuing correct trading over making money immediately, will accelerate your recovery. Ironically, it also tends to bring in more money back sooner because you're trading rationally again. I remember my first trade after the bad week. I took a tiny position on a simple setup and it hit my target for a modest gain, but I celebrated that like a trophy, not because of the dollars I made, but because I executed my plan and ended the day green. That feeling was worth more than any single trade. Now, as you log a few successful small trades or even well-managed trades, you'll notice your confidence starting to creep back in. Maybe the knot in your stomach before each trade gets a little smaller. Maybe you're thinking clearer during trades. That's a sign to very gradually scale back up. If you went from risking 1% down to 0.5%, maybe after a couple weeks of consistent execution, nudge it to 0.75. The key is to not rush the size increase, but let your proven consistency lead the way. All right, guys, so if you made it this far, you're already showing something important. Resilience. The very act of seeking out ways to build back your trading confidence means you have the grit to overcome this rough patch. So let's recap real quick. You want to accept that losses happen and step away to clear your mind. No trading tilt. Analyze the week, first of all. You want to dig into what went wrong objectively. Learn the lessons. No self-pity, just facts leading to improvements. You want to refine your strategy. Decide if it's a strategy issue or an execution issue. Simplify and go back to the basics, focusing only on your best setups. Then you want to use a trusted strategy or framework as your confidence anchor. Go back in the game with a plan that you believe in. Next, remember small wins step by step. Trade small, focus on the process, and gradually scale up as you regain consistency. Remember, losing week or even losing month is not the end of your trading career. In fact, it could be the beginning of a new chapter in your development. I often say a setback is just a setup for a comeback. I know it's cheesy, but it's true. The traders who last in this business aren't the ones who never fail. They're the ones who learn to get back up every single time they fall. And each time you get up, you're a bit stronger and you're a bit wiser. Think about it. You survive 100% of your bad days so far. This losing week is just another story you'll someday tell about the time that things got really tough, but I didn't quit. And by following these steps, you're not only going to recover your confidence, you might even come out of this experience a better trader than you ever were before. Adversity has a way of teaching us lessons that smooth sailing never could. So now go out there and implement this. The next time you face a rough week, you'll know it's okay to feel shaken, but you won't be staying down for long. You've got a plan and you've got the resilience to carry it out. Losses are inevitable, but losing confidence doesn't have to be permanent. So guys, if you found this video helpful, hit that thumbs up and consider subscribing for more Real Talk Trading insights. And do share in the comments, what was your worst losing streak and how did you bounce back? Your story might inspire somebody else. Remember, we're all in this journey together. Every single trader has scars, and it's the comeback stories that make those scars badges of honor. Thank you guys for watching, and as always, stay disciplined, stay focused. You got this.